Welcome to The Explainer. Today we are peeling back the layers on KKR, one of the absolute biggest names in global finance. You know, from Wall Street darling to regulatory target, we're going to unpack the competing realities of this investment giant.
So let's start with this question. You've definitely heard the name KKR thrown around in the financial news, right? But what do they actually do? What's the engine that's really driving this massive, and let's be honest, pretty complex firm?
Okay, first things first. Let's get a baseline understanding, and the best place to start is with their own official filings. At its heart, KKR calls itself a leading global investment firm. Now that can mean a whole lot of things, so let's break that down.
So KKR plays in the world of what they call alternative assets. What does that really mean? Well, it's basically a fancy way of saying it invests in stuff that isn't your typical everyday stocks and bonds. We're talking about buying entire companies, financing huge real estate projects, or dealing in really complex kinds of credit.
And believe me, their operations are just vast. They're broken up into these main business lines. You've got their classic private equity model, that's the whole buying companies thing, but they also manage credit and real estate. They run their own capital markets division, and they even operate a massive insurance business through a company they own called Global Atlantic. It's a huge operation.
All right, so now that we've got a basic handle on what KKR does, let's peel back that first layer. How do the financial markets, the pros who analyze these companies for a living, how do they actually feel about KKR?
Well, for starters, the market puts a pretty hefty price tag on the company. We're talking a valuation of over $100 billion. A number that big? Well, that alone puts it right up there with the absolute titans of the global financial industry.
And it turns out the professional analyst community is, they're overwhelmingly positive. Get this, out of 17 analysts who cover the stock, a staggering 16 of them rate it as either a buy or a strong buy. You just don't see that level of agreement on Wall Street very often. It's really something.
So what does all that optimism really mean in practical terms? Well, on average, these analysts believe the stock could grow by another 37% from where it is now. That suggests some serious confidence in KKR's future strategy and performance.
And this table just perfectly illustrates that confidence. If you look at the breakdown here, you see 7 strong buys, 9 buys. But you know what's really fascinating? Look at the bottom. The complete and total absence of sell ratings. 0. Zilch. For a company of this size and complexity, that is pretty darn rare.
And this is a huge reason for all that bullish sentiment. Just look at these growth forecasts. Analysts expect revenues to jump from over $8 billion this year to almost $11 billion next year. That's a leap of more than 32%.
And it's pretty much the exact same story for earnings per share, which is a really key measure of how profitable a company is. The forecast here shows a nearly 32% increase as well. So, yeah, from Wall Street's point of view, the financial outlook for KKR looks incredibly healthy.
Okay, so Wall Street is clearly on board. The numbers look great. But what do KKR's actions look like out there on the ground, beyond the stock charts? Let's go a layer deeper, because this is where you start to see some stark contrasts in their global operations. And here you can see two very, very different sides of the same coin. On one hand, you have this really progressive, employee-focused initiative happening in Japan, and at the exact same time, you've got a major regulatory investigation into one of their biggest European deals over in Italy.
So, this Japan story is framed as a really positive move. KKR is helping lead a program with the stated goal of sharing the wealth from private equity deals with the workers on the factory floor. It's a move that also, helps soften private equity's often tough public image.
But then you flip over to Italy, and here the firm is facing some pretty serious questions from the European Commission. Regulators have launched a probe to figure out if KKR might have provided incorrect or misleading information during its massive €22 billion takeover of Telecom Italia's network. That's a huge challenge to their transparency.
Now for our final layer. And honestly, this might be the most revealing one of all. We're going to look at the risks that KKR itself discloses to its investors, buried deep inside its official annual reports.
And right away, we find something crucial. KKR discloses that because of its ownership structure, it's classified as what's known as a controlled company. Now, I know that sounds super technical, but stick with me because it is incredibly important. It actually exempts them from certain corporate governance rules that almost all other public companies on the New York Stock Exchange have to follow. And the warnings don't stop there. The company is very blunt with investors. They state that their business is intensely competitive and subject to extensive regulation.
They make it crystal clear that their performance is tied to economic conditions they have no control over, and that they face the potential for some pretty significant liabilities and penalties.
KKR also points out risks that are really specific to their industry, like something called the clawback. So what's that? Well, it's basically a rule in their fund agreements where if a fund does poorly over the long run, the firm's own top executives might be forced to give back tens or even hundreds of millions of dollars in bonuses they'd already been paid. It's a very real financial risk hanging over their heads.
So, after peeling back all these different layers, from the glowing Wall Street reports to the messy reality of their global deals, and even the firm's own stark warnings, what's the big takeaway here? Let's try to synthesize all these competing realities.
You know, when you put it all together, the story of KKR is really a story of these powerful, competing tensions. You've got the market's incredible optimism on one side, and on the other, the firm's own sober warnings about reality. You see this push for innovation, like employee ownership, happening right alongside intense regulatory scrutiny. And woven through it all is this constant drive for growth, which just naturally makes everything that much more complex.
And all of this leaves us with one last thought. KKR is a master of analyzing and managing risk out there in the market. That's what they do. But as the firm grows ever larger and more complex, you have to wonder, is its single greatest challenge no longer out in the world, but actually inside its own walls?